Derek Overstreet, founder of the New Millennium Group. We're a financial planning firm. We have advisors standing by right now to take your call. 888-999-6370. The reason you're going to want to call is we're going to help you retire 3 to 5 years before you thought possible. The way we do this is by putting together a step-by-step plan. So if you're one of those people listening and you'd like a plan in writing, give us a call at 888-999-6370. That's 888-999-6370, or go to utahsfinancialplanner.com.
Welcome to the KSL Real Estate Show. Hear updates on the national and local Utah real estate markets. We cover residential and commercial properties. Plus, get inspiring ideas to make your house a home from our sponsor, Osmond Designs. Here's Heather Osmond and Jeff Caplan on KSL News Radio.
Welcome to the KSL Real Estate Show. We're glad you're listening. I'm Jeff Caplan. Heather Osmond is here from Osmond Designs. Her stores are in Lehigh and Orem.
Yes, they are, and it's always fun at Osmond Designs. This week, it is much of the same, just more and more and more new products on the showroom floors, and it's all beautiful. I love it so much. It's like Christmas at Osmond Designs almost every day of the week. I love when the girls at the store send me photos of the brand new stuff that they just brought out, and it's a lot of fun, and as quick as it's coming out, it's going out the back door and the front door as well. So bring your trucks and trailers, and we have 2 locations, one in Lehigh and one in Orem.
Let me ask you, what's hot right now?
Oh, Jeff.
What's moving?
Right? Definitely sectionals, upholstery, sofas, chairs, all the good things, and a lot of fabrics, a lot of really, really comfy, cozy.
See, that's the difference between you and I. You immediately go to fabrics and cozy. I'm thinking, yeah, you need a sectional because the Super Bowl's in 2 weeks.
That's what I was just going to say. You do have the Super Bowl coming up. So it's a good time to grab all of that. And it's performance fabrics. So you can eat your chicken wings, your pizza, your Diet Cokes, your animals can be on your sectional and your sofa. And it can be comfortable. You're going to have a great time for the party coming up. So yes, Jeff, it's going to be good. Do you have a team you're rooting for?
Not this year.
Yeah.
Eagles fan. I'm just sitting on the sidelines. Seahawks, maybe, but on the 1 to 10 scale, I'm about a 3 on the Seahawks.
Yeah.
Do you have a team? Do you even know who's playing?
I'm a fair weather friend. Whoever's winning is usually who I like to cheer for. I don't know. It's hard to say. I just care about the halftime probably more than anything. But today I'm super excited because we get to talk money. And who doesn't love to talk about that? We have Josh McReavy on the show. He is the owner of Ultimate Home Lending. For the next hour, we're going to break down the latest trends in mortgage lending, from current rates to what's changing this year, and how buyers can position themselves to succeed in today's competitive market. Josh, tell us a little bit about current rates and market news right now.
Yeah, well, so great to be back here. Thank you so much for having us on. It is a super exciting time right now in the real estate industry. So many things are moving. If you didn't see, earlier in January, the Trump administration put $200 billion into the mortgage-backed securities. And so what that allows this to do is that's kind of like a manual lever to start pushing down interest rates. And so if you haven't been on social media, I think every realtor and loan officer in America has made some awesome posts about this. But here's the true facts. If you take a look at what's going on with the mortgage-backed securities, especially the 10-year, as well as another website you may want to check out, it's called Fred. It allows us to actually see what's really going on with interest rates. So we went from 7% last year, and now we're down to 6%. And obviously for like a $500,000 loan, that saves you a few $100s a month. But the biggest thing is that for every 0.5% that we go down in interest rates, it allows 5 million more Americans to actually buy a home.
Are we going to get there? Is there another 0.5% to come?
Ooh, boy, if I knew that, if it wasn't so tippy right now, I think there's a couple of things, not to go too deep into this, but gosh, there's a lot going on with the world economy right now. And so with the mortgage-backed security buy-down lever that they pulled, there are some other factors that are just kind of making it balance and tip back and forth just a little bit.
World events and the turmoil.
Yeah, exactly. Mm-hmm. So that definitely does drive mortgage-backed securities and what's going on with interest rates. However, this current administration, like him or hate him, things are coming down, and that's much needed. In fact, this one is real personal to me, and that is we've hit an all-time high for the average age of first-time home buyers. It's now 38 years old.
That's not a good thing.
Not a great thing at all.
That's really high. That makes me nervous.
It's really scary, especially for us with kids and just trying to think about what are they going to do to actually be able to afford a home.
You know, I'm thinking about this. Conceivably in Utah, you could get married young and have 17-year-old kids when you buy your first house.
Yeah.
You're 38 years old.
Yeah.
So true. But overall home sales are showing modest increases.
Yeah.
And it seems that refinance applications have picked up as rates have softened a little bit. Wouldn't you agree?
Oh, absolutely. So last year, 40% of all mortgage new notes in mortgage were actually refis. The interesting thing about refinances in 2025 is 60% of those were for a worse rate. So we had some interesting things going on in 2025 with refinances. 60% were not getting a better rate. They were going up just a little bit in rate.
So why would you refinance?
Debt consolidation. So people, for the last several years have had more debt, more credit cards, more things that they've had to put on credit. And so they're using the equity of their home, like you just mentioned, Heather. Their appreciation in their homes has still gone up, even in a kind of a crappy year. And so they're consolidating debt. But now we're doing a lot of refinances, especially in Q4 of last year. Our refis here at Ultimate Home Lending have drastically gone up. I'm helping a borrower right now at 7.99 get down to 6.25. They save $500 a month. I love doing that for people, helping them save money.
I think that's incredible. I think the overall trend nationally is that people are living paycheck to paycheck. A lot of people right now are overextended. They are spending more money than they make with the hope of maybe getting a raise at some point, or maybe winning the lottery, or getting, a parent's to give them money in some aspect of their lives. How can we help people live within their means, Josh? I know this is a very, very hard question, but you do a lot of classes regarding this.
Yeah. So living within our means is obviously something well taught here in Utah. I think from a national, I've done a lot of business outside of the state of Utah as well. We are doing pretty good in Utah. However, I do think that, you don't have to have the fanciest house. My wife and I have taken this approach of we try and buy a house on a good street in a good neighborhood and really put just a lot of sweat equity into it. We bought our first house when I was 22 years old, and we put, a lot of paint, got rid of some pink shag carpet, and we were able to make a profit.
What?
Yeah,
It's coming
back. Is that what you're seeing at Heather or Osmond Designs?
Not quite, but there are some really great rugs that are doing that. Yes.
Yeah, there you go. So, we've just tried to do things that way, and you know what? It definitely allows you to level up as you get older. And just one thing people don't understand is things just take time. So average appreciation in this entire state of Utah last year in homes specifically was around 2%. Some counties were 22%. Summit and Wasatch County were in that range. Also, Bear Lake area, we saw a lot of appreciation last year.
Oh, for sure. Okay, so here's another question for you. How are Utah borrowers reacting to current rate levels when compared with the ultra low rates people locked in a few years ago?
Oh, man. Yeah, I get asked this all the time. So it's a really hard decision on whether or not you're going to get rid of that 3 or 4% rate you got, maybe 5 years ago, and you go and buy a different house that fits your needs now. So this is obviously personal preference or your own financial situation. I'm in no way giving advice on your finances. However, I am seeing a lot of people doing one of two things. They're either figuring out a way to keep that house and rent it out and then go buy a new house, or option number 2 is they're letting go of that to get the appreciation and increase in value in their next home. And then obviously, working with a great loan officer, my system actually shops all of my customer rates every day to make sure, hey, if we can save you 75 basis points to a full percent on a refi, we're going to do that. And we're going to play this long-term game and get you down back again when things continue to change.
I love that so much. I've really noticed a trend where it used to be that we would buy our first home and then we wanted to upgrade to a bigger, better home, and then, a third home, a fourth home, a fifth home. I feel like it's not always about having the biggest home right now with all the bells and whistles. More and more, even some of my neighbors are wanting to downsize. They still want a very nice home, but oftentimes a home of, a significant size can be a real liability and not an asset.
Yeah, absolutely. I mean, it can definitely be a financial burden, especially as other things go up. I think a lot of people are wanting to travel and do those other things more and have just a home base.
Great insights. Up next, we'll dive deeper into real-world strategies, how buyers can navigate these rates, and what programs might help first-timers or move-up buyers. Stay tuned. We'll be right back.
We're back with the KSL Real Estate Show, sponsored by Osmond Designs on KSL News Radio.
Welcome back to the KSL Real Estate Show. Thank you for listening. I'm Jeff Caplan. Heather Osmond is here from Osmond Designs. Her stores are in Lehigh and Orem.
Yes, they are. And I love interior design and I love furniture. But more than that, I love real estate. And of course, I love money. I love going to a bank. I love getting loans so that I can buy investment properties and invest in Utah. I've made more money in Utah real estate than I've ever made in selling sofas or candles. I will say that. Today we have Josh McReavy on the show with us. He's an owner of Ultimate Home Lending. He is back again and one of our favorites. Welcome back.
Thank you so much for having me. It's always fun to be here.
You are an expert in the industry. Previously, we were talking about rates and where the market stands. Now, Josh, let's get practical. Let's talk about what loan programs and smart strategies are available right now, especially in Utah.
Yeah, wow. Utah is just such an interesting bubble, right? Like we have so many awesome things. I think we've been ranked number one in entrepreneurship for like 7 years in a row. Our economy is doing well. Obviously, we're seeing a bunch of growth happening. We've got new homes going up. We've got people buying old homes, getting rid of that shag carpet we were talking about and renovating homes and making them awesome again. And so there are different types of lenders out there. There's banks and credit unions that kind of have this box that they have to fill, a little bit more conservative. Ultimate Home Lending is actually a broker shop. So what that allows us to do is we have scenarios, whether you're self-employed, you're a first-time home buyer, you're an investor, doesn't matter. If it can get done, we can get it done at Ultimate Home Lending. Jacinda, my business partner, and I train all of our loan officers to ensure we have the best products, working with the best companies, not only to get it done, but still a great rate.
For sure. Buyers don't always need 20% down. That is a lot of years and years of saving up. There are many loan programs that allow as little as 3 to 5% down. Let's talk about that for a little bit. FHA, VA, and other specialized loans.
Yeah. Great point. So some people really just want to put that 20% down. The reason why they're wanting to put that 20% down is to avoid what's called private mortgage insurance, PMI. And, on the average, someone's going to pay, $150 a month on average, somewhere in that range if they are going to do that. One of the things I try to run the math with our first-time home buyers especially is the average home in Utah is going to appreciate somewhere between, on a good year, 5-ish%. So next year, that same $500,000 house is going to be 5% more. And so it's better to get in now, allow that appreciation to happen while they're still paying a little bit of PMI. So let's talk specifically about programs. So if someone's going to do a conventional loan and they are a first-time home buyer, they can put as little as 3% down. If it's an FHA loan as a first-time home buyer, it's 3.5% down. If it's your second home or third home or fourth home, it's 5%, depending on your debt-to-income ratios, but as little as 5%. So there's some awesome strategies of what people are doing on buying their first house at 3 to 3.5% down, living in it for about 12 months, 14 months, but the minimum is 12 months. And then they keep that house, rent it out, and then go buy a new primary residence with only 5% down. This is an awesome investment strategy to help make sure you can build up your portfolio of real estate with very little down.
And you really can make more money in real estate oftentimes than you can make even working your full-time day job. It is real here in Utah. A lot of that is buying a home right. There are deals in every market. I don't care if there's high interest rates, low interest rates, you have to shop for the deal. And that means getting a great loan officer, getting a great real estate agent, getting a great interior designer to go and stage your home if you're a seller or as a buyer, looking for the easy things like paint and carpet, cosmetic things can improve the value of a home quicker than anything.
Yeah, absolutely. And I call it the 6 P's of success. Proper prior preparation prevents poor performance.
Wow.
Yeah.
Say that again.
Say it again. Yeah.
Okay, 6 P's of success. Proper prior preparation prevents poor performance. And what I mean by that and why I bring that up here is before you go out shopping, before you go looking with that realtor, your awesome realtor, you need to talk to me first. You need to talk to an Ultimate Home Lending loan officer first. We need to make sure we understand what type of loan products there is. I work with my realtor partners to come up with, how much should we be asking in seller concessions so the seller can help pay some of those closing costs, whether that's mortgage fees, title fees, escrows, or even paying down your rate. And so we need to strategize before you make those offers so that when you do go find that right house that maybe you're getting a pretty screaming deal on, we need to have a really good strategy and game plan to make sure you buy right so that you can gain that awesome appreciation.
Oh, for sure. And there's new construction, right? Everyone wants to build a new home. And there are advantages with that, of course, but you can overspend for your neighborhood really quickly by just adding, all the little minor upgrades along the way. And, at some point, you don't get some of those same expenses back when you sell the home. Yeah. But there are people that can build a brand new home and do some sweat equity. So, there's pros and cons to that, which is great. But there's also in remodeling. If you have an existing home, it's in a great neighborhood and you love your neighbors, stay there.
Yeah.
Renovate, update the cabinets, update the appliances, paint carpet, all those easy things, countertops, easy, simple things, flooring that will give you a lot of value.
The problem is when you go into a house, you're cash poor. And doing these things is really hard at first. That's something that comes along later. But can I ask a really elementary question? I see mortgage rates quoted here, there, and everywhere. 6%, 6.02, 5 point whatever. Who are those rates for? What credit rating do you have to have for those rates?
Yeah, that's I bring this up probably daily, Jeff.
You know what? We have to save this for the next section, I think, because we're about to go to break. I'm so sorry.
Just the suspense is killing me.
There's a really good tease right there. When we come back, we're going to talk about credit scores, interest rates, and when the best time to buy a home is, which, of course, we're always going to say right now, today, get in the market. The sooner the better. Stay tuned. We'll be right back.
Welcome to the KSL Real Estate Show. Hear updates on the national and local Utah real estate markets. We cover residential and commercial properties. Plus, get inspiring ideas to make your house a home from our sponsor, Osmond Designs. Here's Heather Osmond and Jeff Caplan on KSL News Radio.
Welcome back to the KSL Real Estate Show. Thank you for listening. I'm Jeff Caplan. She's Heather Osmond from Osmond Designs. Her stores are in Lehigh and Orem.
Yes, and everything is on sale at Osmond Designs right now. If you come in today, mention that you heard this segment on KSL, you will receive an additional 20% off the lowest mark price, which is amazing. Come and shop for the Super Bowl that's just coming up here. We're super excited to help you get a brand new comfortable sofa, your recliner, your entertainment console for that brand new big screen TV, and most likely it'll all be performance fabrics. So you can spill your food all over it and wipe it back up, which is great. Today we're talking about money, which is always good to talk about in the Utah market, and getting the best loan before you even apply or find a home. is more important than ever. Today we have Josh McReavy on the show with us. He's the owner of Ultimate Home Lending and one of Utah's top experts. Josh, welcome back.
So great to be with you. Thanks for having me.
This is so much fun. Okay, let's pick up where we left off. Let's talk credit, budgeting, all the strategies that help a buyer qualify and secure favorable loan terms.
Awesome. Yeah. I mean, it's such an important thing to get pre-approved and understand all of the costs, all of the, it's not just your principal and interest payment. We call it PITI, P-I-T-I, principal, interest, taxes, and insurance. You have property taxes and you have homeowners insurance on top of that. And like we talked about earlier, if you don't put 20% down, you are going to have something called mortgage insurance. So those are just great things to make sure you understand, make sure you fit in your budget, and get things rolling. But man, there's so many awesome programs out there to help first-time home buyers or first-time investors, whatever that is. We have a loan product for you.
So strong credit really helps secure lower interest rates. Guard your credit with everything that you have. Oftentimes you'll have kids or neighbors or friends say, would you mind signing and helping me? And the answer should always be what, Josh?
Absolutely not.
Never.
Don't do it.
Don't do it.
Yeah.
Do not co-sign.
Yes.
Okay. Knowing your score and improving it is critical.
Yeah, absolutely. We've got some cool programs at Ultimate Home Lending where we don't have to do a hard credit pull, but we can do a soft credit pull. So it doesn't actually do a hard inquiry, damage your credit score.
Even asking damages your credit score.
Yeah, even thinking about it. Yeah.
Well, sometimes I'm at Dillard's or Macy's or Nordstrom. I'm at the mall and they say you can save 10%. And you're thinking, well, that's like $50, right?
But if you get a credit card there, it's going to ding your credit score by about 10, 20 points,
that's
right?
Exactly. It's not worth the $50, right?
It is that's called consumer debt. And I highly disagree with consumer debt. I would rather you just use your Chase credit card that's getting you 2% cash back or whatever. Don't do those consumer loans. I came home from a mission and there was an $8 balance that was like 45 days late. I didn't know anything about. Went to go buy my first house and my credit score had gone down by 60 points for $8. Don't do it.
This takes me back to the question I was asking earlier. When you see when you see mortgage rates advertised, in big numbers on billboards, 6.02, 5.0, who are those rates for? What credit score do you need to get those rates?
Such a great question. So as you're going down I-15, 90 miles an hour,
Excuse me?
Yeah, I think that's actually
totally Jeff.
Well, excuse me? I think we kind of ignore the other signs there. But as you're going there and it's in 12-point font at the bottom, I've actually stopped to see what it actually says. And that's a $400,000 purchase price with 25% down, with a 740 FICO score and a 1% origination cost. So what that means is if you get a $500,000 loan, you're going to pay $5,000 just to buy down that rate. So that's the rate that they're advertising. So that's who they're specifically advertising to. But on average in Utah right now, about 6 to 6.125 for someone who's got 720 or above. That's about what I'm seeing right now with my current borrowers. And that's on a conventional loan. FHA rates are a little bit lower. But again, there's other fees associated with that. So what we like to do is I'll show you my rate stack. So it shows you can get this rate for this cost or no cost. Sometimes people don't have enough down payment or enough to cover some of their fees. So we can actually go up in rate just a little bit to help them cover some of those costs. The lender will give them some credit.
And it'll make refinancing all that much sweeter.
That's right.
When the time comes.
Close to 3% again.
That's right.
So there are some required documents that people need as well. Not only a credit rating, hopefully above 700, 750. Get in the 800s if you can. You also need tax returns. You need bank statements. You need employment history, correct?
Yeah. I mean, everybody's scenario is so different. I had an awesome call with a couple last night. They newlyweds. They've been married for like 9 months. They're currently going to UVU, and they both are graduating, and they're going to. They both have job offer letters that they start in May. I can actually get them approved and into a house in April before they even start that job. So I can use their college history if they're going to college for what their job offer is for, that same industry type. We can actually use that college experience to help them get approved. So, but a different scenario, I work with I live in Summit County, so I have a lot of higher end clients as well in the couple $1 million range. And oftentimes they are self-employed. And self-employed people don't tell Uncle Sam exactly what they're paying, right? Or making. So we do.
This is up there with me doing 90 miles an hour. What are you doing?
They write everything
Hey,
off.
I'm saying it's legal. They just know how to work the system.
They paid the right tax experts to write it all off, but then when you try to go get a loan, your tax returns are not saying what you need to say to be able to qualify. So that's not okay.
Yeah. So what we do is we do a bank statement loan. So they bring in 12 months worth of bank statements, and we're able to figure out what their actual income is rather than what they put on their taxes with all the write-offs. We get rid of that and get down to what we can actually approve them for. So each customer is a little bit different, but a great rule of thumb is 2 years worth of work history, some amount of down payment saved up, maybe 5-ish%, and be kind of in the same type of pay. So whether you're W-2 or you are self-employed, have that for at least 2 years.
Pre-approval gives buyers negotiating power, Josh. It's everything. If you have that pre-approval letter, you know that you're solid, that you have the money in the bank, you can prove it. You can go in and negotiate a better price on the home.
So, Josh, I walk in and let's say my credit rating is above 720. I am gainfully employed. Say I just got the job. I've been working there for 6 months, right? Maybe I can cover the mortgage. I have $25,000 in the bank. I want a $500,000 house. Can you make it happen?
Yeah, you're a great borrower. Just describing on that. So getting a couple of things there. You've been you've been employed for about 2 years. You've got a good down payment.
Yeah, but I want to stress that's a 5% down payment, isn't it? $25,000 on $500,000. I don't have any money for those closing fees and whatnot. How are you going to help me out?
Yeah, so that goes back to the proper prior preparation, working with your realtor.
What were those PPs again?
Yeah,
the 6
proper
Ps.
prior planning prevents poor performance.
Love it.
Yeah. And so working with your realtor is the same way with me. So before they go make an offer, hey, Jeff has this amount of down payment. I need $10,000 in closing costs to cover mortgage fees, title fees, and all of his prepaid taxes and insurance. And then we're going to use the rest of it to do a little bit of a rate buy down. So in the offer, the realtor can put that in the real estate purchase contract and get you some money for some closing costs.
That's amazing. What's some advice that you would give to our listeners who are trying to boost their credit or strengthen their mortgage application, Josh?
Yeah, great question. I spoke at my local high school yesterday. We talked all about credit, what builds your credit, what not to do, like we talked about consumer loans. But for younger borrowers, getting a small line of credit on like a credit card, maybe that has a $500 or $1,000 credit line. It's generally best if you don't go above 30% usage. So if you have a $1,000 credit card, don't go above $300. Pay it off and gain that history. Part of your credit score is how much credit history do you have? And so for maybe the right people, this doesn't apply to everybody, but maybe if one of my kids, when they get that age, I'll put them on my credit card that I've had for 15 years that has great payment history, put them as an authorized user, and after a few months, that will really bump their credit score to ensure that they're getting the best deal. Now, I just want to describe one thing to you. If you have the difference between like a 690 FICO score, let's say I can get you a 6.375% interest rate. In some cases, same person has like a 740 credit score, I can get you like a 6% interest rate. Credit score really does help ensure what kind of deal you can get and the interest rate you can get. So having good credit, banks love to see that. It's
huge. It's everything. So guard and protect that with your life. Here's another quick question for you. How does timing, such as seasonal market changes, affect qualifying for a home or a loan?
Yeah. So right now we've kind of been in a seller's market, a buyer's market for a couple of years. Homes are sitting a little bit longer, things like that. And so especially in December, if you can find a house that's on the market and they haven't sold it, they would love to sell that to you, because if they're willing to sell it in December, there might be a reason for that. So this time of year, boy, we're starting to see a lot of applications coming in, especially for first-time home buyers.
Is there any seasonality to interest rates?
Well, if you take a look at the last 3 years, quarter 4 has been the lower rates. We've seen an awesome little dip over the last couple of years.
Excellent. Josh, how do people find you?
You can go to yourmortgageguide.org. You can also find me on Instagram and Facebook, yourmortgageguide.josh.
Today's guest is Josh McReavy. He is the owner of Ultimate Home Lending. Stay tuned. We'll be right back.
We're back with the KSL Real Estate Show, sponsored by Osmond Designs on KSL News Radio.
Welcome back to the KSL Real Estate Show. We're glad you're listening. I'm Jeff Caplan. Heather Osmond is here from Osmond Designs. Her stores are in Lehigh and Orem.
Yes, and if you are out and about today, please stop by Osmond Designs. Come and check out all of the new intros for 2026 that are hitting the showroom floors. It is so much fun. This year's trends are absolutely incredible. The best textures, the best colors. It is a lot of fun. So come say hi. We'd love to have you. I'm Heather Osmond, owner of Osmond Designs. Today we have Josh McReavy as our guest. He's the owner of Ultimate Home Lending. And this last segment, before we run out of time, we have to talk about house hacking. This is super cool, Josh.
Yeah, it's one of my favorite topics to talk about in real estate, because it helps me with my mission. My mission is to help as many people as possible to live where they love. And we discussed earlier that the average first-time home buyer now in America is 38 years old. I'm on a mission this year, Heather, and that is to make sure that people are not that age when they're buying a house in Utah.
That is way too old. We need to bring that down to 28, 22.
Yes.
You were 22. I was 19 when I bought my first home.
Yeah, it's awesome. And so we want that for our kids. We want that for people here in Utah. We've got such an awesome community in Utah. And so one thing that we're doing is we're teaching a class almost every Thursday night, whether it's at BYU, University of Utah, up and down the Wasatch Front and in the Wasatch Back. And what we're teaching them is how to house hack. So house hacking is a really great way to help people actually get qualified without mom or dad most of the time. And they can really drastically drop their their monthly mortgage costs down to, on average, about $2,000 a month.
Okay, so what's the definition of house hacking? What does that even mean?
Yeah, so house hacking is where you're using your primary residence to earn some sort of investment income. So there's really a couple of ways. So the most common way I'm helping first-time home buyers actually get approved is where it has a mother-in-law apartment in the basement. So what is that? What's a legal accessory dwelling unit, or I'm going to say ADU from now on. An ADU is where you have off-street parking for one car, a separate entrance, so that can be around back, around the side, through the garage. It has to have its own cooking space and its own bathroom. And then it also has to be closable from both sides, so can't be part of the main living area. So that's an ADU. And then what they do is they come in and they find a renter. On average, people are getting anywhere from $1,300 to $1,900 a month in rental income. What I can do as your loan officer is the guidelines change. This is only 3.5 years old. So we're really trying to help people understand it. I can take 75% of that future rental income. So let's say $1,500 a month in rental income. I can take $1,125 and give you basically a raise of income to help make sure your debt to income ratio is low enough to actually get you approved.
These are such creative ways to get into a home. Oftentimes, you're not making enough at your day job to be able to qualify, and home prices continue to rise. So house hacking, being creative, renting out the basement, living in the basement, renting out the main house. There are so many ways that you can, like you're saying, add income to your day job.
Yeah.
So that you can qualify for these homes.
Yeah. So if your mortgage and principal, interest, taxes, and insurance are $3,500 a month, but you're getting $1,500 in rental income, the effective rate to you is $2,000. And that's way more affordable. And the second way to house hack, especially with like some of these summer sales guys, they're buying these townhomes in Vineyard. They're 4-bedroom apartments or condos or townhomes, and they're renting out the rooms to other people, and they're making like $2,100 a month off of rental income from just their buddies.
And living for free.
Basically.
Right?
Yeah.
Yes, it is inconveniencing.
Living the dream.
Living the dream, right? No, this is incredible. My own daughter, my oldest daughter, did that very same thing. Bought a home, rented out the rooms, and was in a positive cash flow and living for free in the master bedroom. Yeah. Incredible. My personal story is I lived in the basement, rented out the entire upstairs in our first home. Which
Wasn't
of
it
course,
like quiet up there? Was it like that?
It was loud, but at the end of the day, we lived like no one else was willing to do, so that at some point we could live like no one else could do. And there are inconveniences, but I will tell you it's worth it. And if you can do that early, work now or work later. So do it now, and then later you're going to live a really great life. We love having you, Josh. Thank you so much for being on the show today. Josh McReavy, Ultimate Home Lending. Please call him and his partner, Jacinda. Signing off, Heather Osmond, owner of Osmond Designs Furniture and Interior Design Stores, here with Jeff Caplan. We'll see you next week.
Finding a hoodie that lasts through the season can be tough. The American Giant Classic Full Zip Hoodie is made to last a lifetime, so you can count on it to bring you comfort and warmth year after year. The iconic Classic Full Zip Hoodie is the jacket that started it all for American Giant. Custom heavyweight fleece and side panels for mobility make it the best hoodie ever, and a double-lined hood and reinforced elbow patches mean this hoodie will last. Born from a commitment to support the communities that create its products, every American Giant piece is made in America and designed to last. No exceptions. The result is durable clothing, like the premium Slub Crew Tee, No BS high-rise pant, and slim roughneck pant that become part of your life. Snag the hoodie that will bring you comfort for life. The American Giant Classic Full Zip. And save 20% off your first order at American-Giant.com when you use code STAPLE20 at checkout. That's American-Giant.com, code STAPLE20.